You already know that inflation is out of control, but do you really understand what it looks like? It's very difficult to understand because you haven't really visualized it, and that is on purpose. So I got this visual that I want to show you real quick that explains visually what the heck is going on. So let me show you this real quickly. Look at this chart I found, what inflation really looks like. I really like this chart because as you can see, you have these prices of things. We got gas, we got wheat, we got corn, we got cotton, we got oil, coffee, and look at the prices going up and down in real time. This is a great example because depending on what you're buying, if it's gas, if it's wheat, if it's corn, if it's cotton, the prices are going up and down all the time, depending on what assets or items that you're buying. I thought this chart was very helpful and insightful. When you look at this, look how high some of these prices get here towards the end of this. So let me kind of break this down for you. Why did I want to pull this chart up? Because the way that we think about, the way that we talk about, the way that the mainstream media talks to us about inflation is super confusing. And in my opinion, it's wrong. So inflation, they're trying to measure inflation through the economy with one single number. So we're talking about trillions of prices on trillions of items that have trillions of inputs, and they're going to measure all that with one single number. And as you can just see from that simple illustration with just a handful of items, how the prices are going up and down all the time. Guess what? Prices go up and down all the time. And guess what? Nobody can control that. Not the Federal Reserve, not a central planner, not you or I, and nobody should even try. Prices of trillions of things move for trillions of reasons. So let's just say, for example, trends. So the color, neon colors were super in, and manufacturers make lots of things in neon colors, and then they go out of trend. Nobody wants neon anymore. Now they want pastel colors. Well, all that stuff that was made with neon that is now overstocked is going to have to be dumped on the market. So it was very in demand, very trendy, and it was a high dollar amount. And now they're trying to sell it as cheap as they can. Another example, I saw today a headline, I believe it was the CEO of Walmart, said that they realize that the inventory they have is the wrong inventory for right now because prices are so high. People are focusing on the staples, mainly focusing on groceries. And so what their goal is to get rid of as much inventory now as they can by marking it all down. So shout out to Walmart. Go get some of that, sell merchandise if you want. But they're going to mark all that inventory down to get rid of it as fast as they can while there's still some money left in the economy, so they can turn all that inventory into staples that people want. So those items are going to go down in value for no other reason than Walmart decided they bought too much of them and they want to dump them right now. People like vanilla ice cream. Now there's cookies and cream. People want cookies and cream. Tastes change, styles change, seasons change. You made too much winter clothes, and now summer's coming, and you got to get rid of the winter clothes. Guess what you're going to do? You're going to mark it all down. So prices change all the time. For anybody like the Federal Reserve to think they can control prices and they can boil prices down into a single number, it's absolutely ridiculous. Let's take a look at this right here from the Visual Capitalist. This right here shows the monetary inflation. So this purple line right here is the amount of money in the system going up. The green line is the percentage change. So sometimes it's going up, sometimes it's going down, but the purple line shows it's always basically going up. Now, why do I show this? Because the definition of inflation is really monetary inflation. When you increase the money supply, that's inflation. The thing is, though, when you increase the money supply, it causes prices to go up all over the place. So, for example, you have more money chasing the same amount of goods and services. That creates demand pull. They call that demand pull. So there's more demand chasing the limited amount of goods and services that pulls the prices higher. All right. But typically, so we have monetary inflation. Now, typically, when you hear inflation, the government says CPI, consumer price inflation, is at 8.6%. They're talking about consumer price inflation. So when the inflation occurs when the prices of goods and services increase. But as I showed you on that visual that we opened up, all the prices of goods are changing all the time.